Hi everyone. Today let's talk about sector momentum and potential strategies. We've been talking a lot about tariffs. Let's talk about something else. How are we going to play the April momentum? Let's take a look at the different strategies. And of course, we'll get into all the charts and data that we normally get to on the weekend videos. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel. And let's get started. So let's talk about the strategies here. You can see momentum strategies continue to do really well. Let's take a look at what they're looking at. They were in discretionaries. We said that was not a good pick. That ended up being absolutely true. Easy Rider portfolio continues to do pretty well with that diversification into treasuries, gold, and commodities. Again, not a huge fan of commodities, but gold has been great. Treasury bonds have been great. And then they say Momentum Rider continued to squeeze out a small gain in March, powered by moves in gold and emerging markets. So let's see what they're looking at. First up is sector momentum. It did underperform. It was down 6.2% the last month versus the S&Ps. And you can see they picked discretionaries, not good. Financials were okay. Communication, not so great. So some of those were kind of higher risk sectors. Discretionaries was the best place to be. Utilities was more defensive. So that's what they're going with right now. Utilities, communication, again, I don't know if I like that as much, but financials, I would probably put staples in there somewhere. That was one of the better ones. And then Easy Rider portfolio, like I said, trying to return 4 to 8%, still invested in global stocks, good amount of bonds, commodities, hedge against inflation, a little bit of Bitcoin in there. Bitcoin has not been doing great for it, but Easy Rider portfolio relatively flat in the downturn. Excluding Bitcoin, you can see it did better on the short term, but on the medium term, obviously Bitcoin has provided a ton of gains since 2011. And of course, in the drawdowns, it tends to do a little bit better. So you can see it dipped just 1% over the last month versus global stocks, which were down 3.5%. And it is still up on the year, which is obviously better than everything else so far. So again, continues to be a pretty decent portfolio. Are you going to maximize your upside? Not so much. Are you going to minimize your downside? Absolutely. And then the Momentum Rider portfolio, this is a great opportunity. You can see it's done really well. What are they in? Again, a lot of that is Bitcoin here. Excluding Bitcoin, still outperforming really well. This was the only one that managed to hold some gains here. You can see it was up 0.7% in March, continuing to do well. Gold and emerging markets continue to do really well. I'm not a huge fan of emerging markets generally, but seems to be holding up better. Bitcoin was up 1%. Obviously, stocks not so good there. Momentum portfolio still up 4.4% so far this year. Obviously, the S&Ps are down, so good performance there. You can see the sectors that we're in: global stocks and developing markets, emerging markets, long-term bonds, international govs, commodities, gold, and then the Bitcoin portion there. So current strategy, 24% developing, 24% emerging, 24% gold, 24% commodities, and 4% Bitcoin if you want to continue to follow along with these portfolios. Looking at fear and greed, we finished the week at a 4, down from a 7 a week ago. We were at a 21, so just continuing to crater just about as low as it goes. Like I said on the Friday video, I don't think we've been this low ever, potentially. Maybe we saw it during COVID. You'd have to go back to a fear and greed chart, but this only goes back so far. It's been a very long time since we've been a 4, if ever. You can see that straight down price action over the last Thursday, Friday sessions. Strength cratering down to a minus 4.7. Breadth cratering as you would expect. Put call ratio spiking to 0.95. Volatility all the way up into the 40s. Safe haven demand cratering. Equities have done terribly. Bonds are doing quite a bit better. And then you can see even junk bonds elevating here. Extreme fear. People are worried about junk bonds and gravitating towards those investment grade or government bonds. Moving over to the AAII survey here for the second. The bulls are back into the 21 area. We stepped up to 27 briefly, but back down to a 21. You can see neutrals getting squeezed at a 16. And then the bears all the way up at a 61.9, which is your 1-year high for the bears. Absolutely terrible on the sentiment. We've been here for 5 weeks. It only shows 4 right now, but we were there before. So continuing to be very bearish. Have we hit peak bearish yet? I think we're getting close. I think you have maybe 1 more week of terribleness at most before we start to see some buyers coming in. I don't think everything is terrible the way that markets seem to think that they are, at least for now. Moving over to seasonality, you can see April is supposed to be a good period, so market's absolutely not following any of this, but just for your knowledge, supposedly April is generally bullish. Moving over to the seasonal calendar here, you can see we are supposed to see some bullishness on Tuesday. Of course, all of this is kind of out of the window with all of the tariff news. It's obviously not following a general structure, but we do have the FOMC minutes. It'll be interesting to see if they talked about tariffs at all. We have CPI on Thursday. That could be interesting. And then PPI Friday. Consumer sentiment from Michigan as well. And then we roll right into expiration week, which is generally bullish for April. Like I said, April is generally bullish, but of course, the geopolitical environment is currently driving markets. Moving over to the economic calendar, pretty much nothing here for the Monday or Tuesday. FOMC notes, 5-year note auction there for Wednesday. Crude inventory is interesting, and then all of the inflation data definitely going to be very, very interesting. Want to see the federal budget continue to come in. You can see the deficit for February was absolutely terrible, $307 billion. Supposedly that's going to come in to minus $126 billion. Hopefully these are all Doge savings. We'll see. Hopefully that can continue to come in, maybe even turn into a zero deficit. That would be wild. Maybe inflation can continue to come in. Fed balance sheet there. Want to see how that selling continues, if they're going to continue to roll off aggressively. And then PPI and Michigan data, consumer sentiment to finish out the week. Not a ton of big data except for that inflation on Thursday. And then moving over to earnings here, you can see we are starting earnings already again. We have Constellation Brands, Walgreens Boots Alliance, Delta Airlines on Wednesday, Progressive and CarMax for Thursday. And then for Friday, we have all of those big banks starting to roll out. JP Morgan, Morgan Stanley, BlackRock, kicking off the earnings season. Always a short turn between the December earnings and the March earnings, in my opinion. Feels like they're really tight, but earnings season getting ready to get started once again. Moving over to Max Pain, you can see Max Pain for the week is all the way up at 564. Obviously, I don't think we're going to get anywhere near that. Current stock price 536. You have puts here at 490 for the S&Ps. Some put walls here at 540. We're obviously already below that. Maybe we find a little bit of support in there. That could be interesting. The put call ratio is extremely high, like we talked about. 4.44. Never seen it that high, at least on this indicator. Very, very high mark. So will the market try to find some support this week? I still think that that is a pretty decent possibility that we don't just continue to sell off in 5% increments all week. That just seems unlikely to me. Moving over to the chart, starting off with the SPX here on the monthly view, you can see it's down almost 10% on the month, 9.5% there. Through the 21 EMA, your 55 EMA is all the way down there at 54.63. Are we even get that low? I just don't really believe we're going to go there in a straight line. You can see even in this most recent fall back from January of 22 to October of 22, we did have some months of positive price action. You can see down 8% in June, but the following month was a 9% up move there. So are we going to get a continuation straight down? Maybe. You can see here April was down 8%. And then the following month was completely flat. We threw wicks in both directions. So are we going to fall to this support here and then continue higher? If we did fall from current levels to that support, that would be about another 2% lower, which is not too much, right? We've had a really big fall. Back-to-back 5% days. If we do another 2%, touch the trend support, and then can see some continuation higher, that could be interesting. We are below this major trend there, so that's a little bit concerning. Once you interacted with this upper structure and then broke back below it, we expected some falls in there. If this zone breaks from current level to that next support is a long way. That takes us about 18% lower back into this consolidation range here, closer to the 4,000, 4,100 level. That would be interesting. Obviously, that's not what we want to see, but do keep in mind that that is a possibility. Again, probably not in a straight line, but certainly a possibility. Then looking at that weekly chart, it was down 9% on the week. You can see that same trend support. On the weekly chart, you have the 200 still sitting there at 46.74. If we fell from here to there, that would be about another 7.5% lower, maybe a little bit more, 7.75 potentially. That would take you to this kind of consolidation range here, and basically the highs from July, you'd have to say that's probably in play, closer to that 4,600 area. So again, a very important zone here, waiting to see if this zone holds or not. You can also see we're already oversold on the weekly chart. That does not happen very often. You can see last time we were oversold is back here. Got very close to it at a 30.2 in May of 22. and then we saw a slightly higher low on the RSI at a 30.4, and that ended up being a decent area to start buying in there. We did rally out, we did have a deeper low, but you can see the RSI didn't get oversold on that, hit the 200, and then we ended up getting a really powerful move to the upside from there. So is there more downside? Yeah, probably. Is it going to start to slow down? I think also yes. Moving over to the Tasty charts here for the SPY. This is the monthly chart. Again, you can see that April candle here. Your support right now is 491.26. You're in technically still bullish conditions. The trailing stop has been all the way down here for a while. You also have the 34 EMA there at 498.67. So again, about $7 lower. So with that would give you a little bit more sell, but nowhere near what we saw on the Thursday, Friday. Touch that level, and then we'll see if we can find some support. You can see here the previous fall, it was a lot more orderly, came to the 34, found support the following month, did overthrow it, but they did bounce higher to that 9 EMA and then continue lower to the 55 EMA, which was closer to the 355 area at the time. Currently, that is at 459. Are we going to end up there ultimately? Certainly a possibility. That's in line with your second ATR band there at 458.86. So that would be your next zone if this one were to fail. I don't think we're going to go in a straight line, like I said, but certainly a possibility. And then looking at the weekly chart, obviously very, very extended, way below the lowest ATR band. And then you got that 144 EMA as support at 499.11. That's where I think we're going here next week. We'll touch that level and then probably at least see a short term, at least see somewhat of a hesitation in that area. In my opinion, maybe even a little bit of a relief rally. This was not a lot of a relief rally here. We just kind of consolidated and then got a big move to this area here, which I do think is going to hold at least a little bit. Moving over to the NASDAQ here on that monthly chart, again, you can see the next support is around 16,833. If we did get that continuation to that area, that's only about 3% lower. So it's certainly within the range there. Are we going to get there? Possibly. Momentum still bearish. RSI breaking down, obviously nowhere near oversold yet on the monthly chart. And then just looking back at this fall here, you can see down 13.3% in April of 22. Even that didn't feel as terrible. Even though it was a higher percentage, it did take all month to do it versus this one down 9.76%, but it felt so dramatic that it just feels really aggressive. And then looking at the previous month, 7.69% down as well for March. So April, not great so far. We're already still on the lows, looking for a little bit lower to that support area. And then looking at that weekly chart here, you can see that 200 and the 144 EMAs in that same area. About 6.5% lower to the 144, and then you can see that 200 about 9.6% lower. Is it going to do it in a week? Are we going to get back-to-back 9.7% down weeks? Feels really aggressive. You can see the RSI already oversold at a 28.55, but certainly potential. This zone also correlates with the highs back here from July of 23, which does kind of correlate with the high in September of 21 and this consolidation low back here in December of 21. The high of that consolidation is the 16,005 area that we already talked about. That seems like it's a decent area as well. So more selling to come likely. Is it going to continue at the same clip? I just don't think so. Then moving over to the NASDAQ here on the Tasty charts, you can see that same 34 EMA is at 416.68. So expecting to find at least a little bit of support there. And then you have that trailing stop at 398.31, which takes you back to this consolidation high again from November, December of 2021. So we'll see if that zone ends up holding. Otherwise, your next support is all the way down at the 55 EMA, which is there at 375.80. Is it going to continue that low? Again, I just don't believe that it's going to go in a straight line. Could absolutely go there eventually, just like we did here. Came off of this top ATR band, went to the second lowest ATR band, consolidated at the 55 EMA on the weekly, and then ultimately continued higher to that next zone. So that would mean your target right now is close to that 375.80 area over the medium term, but short term, I just don't think we're going to continue to go straight down. And then looking at the weekly chart, you can see that 144 EMA sitting right there at 418.52. Are we going to find some support there? Again, I do think that we will. So there's a couple of levels that are pretty powerful, very, very close here for the next week, and I do think we'll find some support there. Moving over to the Russell, you can see this one fell 9.6% on the week. You can see we came to this critical trend line, and the Russell actually did bounce a little bit on the Friday. This was the only one that did not close on the lows. You had the major trend line. You can see it marks a perfect bottom back here in October of 23, and then we had a massive rally out. Critical zone here, right at it, 181.19. This was the zone we talked about. And this is interesting. We threw some wicks. You had support at 179, didn't quite touch 175. So this zone ended up holding. Consolidation bottom here, consolidation prices in here. But the trend line held. Is this a zone where we start to see some support come in? Potentially. I do like the Russell here in terms of levels. 183, want to see it start to get above there. Hold the trend. Next week, the trend will be a little bit higher, obviously. Closer to 181.50. Could still throw wicks, but want to see it hold some structure in here and show at least a little bit of a relief rally. And then moving over to the Tasty charts here on the monthly, you can see that monthly 89 EMA right there, 181.19. The level is 180.69, so it touched that level. Still technically bullish conditions on the monthly, which is a little bit surprising, but we're back into this zone here. Is this the zone that's going to hold? You got that 89 EMA, that held last time. Want to see that structure hold. And then your trailing stop, 171.35 is your next support. And then below that, the 144 at 162.80, is that the zone that's going to hold? Who knows? That takes you a long way back here. That zone would take you back to the pre-COVID highs, back to the highs here in August. That would be interesting, but keep it in mind. That's where we are now. And then looking at the weekly chart, obviously very much oversold below all the EMAs. There's not really a whole lot of information here. Very much bearish conditions. Your trailing stop is 223.09. Moving over to the Dow here on the weekly chart, you can see we're in this consolidation here. You can see that volume profile there. Your next zone of support is going to be that 144 EMA all the way down here at 360, and then the 200 just below that at 350. So this is your zone, kind of 300 to 350. Might overthrow it just a little bit to get back to the highs from July. That would take you to 345, but are we going to fall through this zone right away? Maybe, maybe not. We said this rally was too aggressive. We said there was not a lot of volume in it. And now that's kind of culminating. Makes sense with this double top. Was this double top already happening and then you got the breakdown structure here? Or is this actually tariff driven? It's kind of hard to say at this point, but structurally, clean double top, clean breakdown here this week. Now you're expecting at least a push to probably 373, the low of this consolidation, and then we'll see what happens after that. Then moving over here to the equal weighted S&Ps, you can see that 200 and the 144 already sitting in here at 155, the stock price 157. So just $1.50, a little bit lower than current price. You can see momentum, very bearish, huge volume, already oversold. Is this the zone that holds? Potentially. You can also see this consolidation high here. Very important level, that 155.79 level. So we'll see if that continues to matter or not in this zone. But I think this is going to play a major role in next week's trading. And if the equal weights do start to find a bottom, that could provide some support for the rest of markets. Moving over to the ratios, you got the SPY Russell continuing to stay bullish through a big wick and then ended up finishing relatively unchanged. So SPY Russell pretty much flat. Obviously the NASDAQ was the underperformer this week. That was down 0.75%. It's right at the level of 343. We'll see if that one continues to hold or not. We've had this kind of long consolidation, but I think tech might not be the best place to be. Although some of these are relatively unaffected by the tariffs, we're going to wait to see what that looks like on the Monday. Extending out that trend line there, you can see we did actually contact that trend line pretty closely. Marks a bottom back here in June, interacted with it, and then a high back in January of 23. And now we're back into it here. That's going to be interesting. Are we going to go a little bit lower from here to here? Still potentially, but it does seem like an everything sell, relatively unchanged on the ratios. Moving over to the SPY divided by the M2 money supply, you can see that huge down candle, broke this level here, went right through the next one. You could argue we're right here, maybe there's a level that should be in here, but the major level is that 2205 level. I do think we're going to go there at some point. That's about another 5% down, so one more day, according to the Thursday-Friday sessions, that would take us right to that zone of support. Obviously super oversold already, momentum very, very bearish. Let's go back and take a look at that dot-com bubble style move here. Remember, 2205 is the critical zone. Obviously, we didn't get all the way up into the 32 area. We kind of stalled out in here, but eventually you did pull back all the way to these zones here. 2205 is the major zone where we really cannot sustain above that level for whatever reason. You can see consolidation through here. This was 2008. and then we rallied back up into the zone. We hovered there for a long time, and then you can see bubble conditions here. So are we going to head back into this range here? I think that's most likely, which again gives you about another 5.5 to 6% lower until we hit at least the top of that sustainable level. Moving over to Apple and Microsoft. Apple had one of the worst performances on the week, down 13.5%, but you can see major trendline support, 144 EMA, also in that same zone at 186.38. Is that zone going to hold in here or not? You also have a level 186.81, so we're going to see. This zone maybe finds a little bit of support. You're also back into this consolidation range from here. So looking at the volume profile, you can see tons and tons of volume in here. Definitely some buyers going to be playing a role. The ultimate support for this zone is going to be closer to the 176.15 area. And then looking at Microsoft was down 5.01%, back below the 360 level. The next support for me, 352.07. That's the low from this consolidation here. And then you can see the next support would be 352. 352 takes you back to this level here. And then the next consolidation range there, 144 EMA is 347.14. And then the 200 right there at that 330.03 level, sitting at 330.17. If we did see those falls, that would be about another 3% lower there, and then about 8% to that 200. Again, I do think we'll get there eventually. Is it going to be a straight line like we've been seeing? I don't think that is super likely. Moving over to Tesla and NVIDIA. Tesla was down 9%, and then you got NVIDIA 14%. Absolutely abysmal there, back into the 90s. We're back into this consolidation range here, but there is a ton of room. This could continue to fall another 20 to almost 30% there. More than 30 really if you go to that 200 SMA. That's closer to 40% lower from here all the way down to that 55 level. Is it going to go there? Probably not. I think that's probably too cheap. But we'll see how it plays out. There are some levels of support. The next one for me, like I said, is that 90.69 level. We said that was probably going to be where we went to after 95 broke, and sure enough it did. So far that looks bearish. And then Tesla, your next support is that 232.57 area. You can see we are holding support in that 144, the 200. This is a wide range, so it's still very volatile, but structurally it's actually held up really, really well in this zone. Momentum is actually starting to step towards bullish. You have a big spike up, full round trip of the move. A lot of times you can see these kind of swing to the upside after that full round trip. So waiting to see how that plays out. Right now, I would say this actually looks okay structurally relative to everything else. Moving over to Amazon and Alphabet, same kind of thesis as everything else. Are we going to go to that 200 and 144 EMA consolidation? For Amazon, that takes you about another 11% lower to the 152 area. And then looking at Google here, that would be about another 6% lower, 6 1/3, somewhere in there, closer to that 138.21 area. Is this a zone where you start to find some support? I think it's certainly a possibility. These are both almost oversold at a 31.27 and a 31.37 respectively. Either way, these are pretty well off of their highs already. About 29, almost 30%. And then you can see here for Alphabet, that's about 28, almost 29% from its highs. So either way, they've fallen a lot. I think there's a little bit more, but I think we've done most of the damage, at least for the short term. And then moving over here to Broadcom and Meta, you can see Meta was down 12.5%. Broadcom was down 13.5%. Huge move here for Broadcom. Took out the full round trip. Momentum very bearish. At this point, you're looking for kind of the low here, in my opinion, around 130. 143 is still holding. You do have an intermediate level in there, but 130.88 seems like the most likely. And then, of course, that 200 and the 144 sitting there at 313 and 96.85 respectively. And then looking at Meta here, you can see this has been one of the best performers, way off of that 200. Is it going to fall that far? That's another 31% lower. That would take you back to the 346 area. I would say that's pretty unlikely. From top to bottom, we are down about 30%. Is it going to go another 30%, get cut in half back to that range there at 53.1/3% down? Maybe, but again, I just don't think we're going to see that in a straight line. I think you have some consolidation volume in here. You can see it on the volume profile. There should be some support in this zone. Realistically, that's about 6% lower. Moving over to discretionaries and staples, you can see staples were down 2.4%, close to 2.5%, nothing crazy. Did try to throw a wick higher, ended up getting a lower high and then pulling back here, but now we're in this kind of consolidation range. Probably not going to get too much lower than the 200 at kind of the 74, 75 area, but we're at 78, so maybe we do fall a little bit more. That's about 4.5% lower. Wouldn't expect it to get too much lower than that. Staples is held in there really, really well, as you would expect it to. And then discretionaries, dumpster fire from top to bottom, that's about 23%. Is it going to fall a little bit more to get to that 200? That would be about 4.75% to 5% lower potentially. Still think it's possible. In terms of conditions, you can see almost oversold already on discretionaries on the weekly chart. We're back into this consolidation range. I certainly think it's a possibility we could get into that zone, but again, not too much lower. We've already round tripped this move here from September to current. Are we going to continue to fall below this level? Maybe, maybe not. Moving over to Breadth, obviously a terrible week for Breadth. I don't think I've ever seen it go down 84.5% in one single week. You can see some of these pretty terrible weeks here. 83, okay, pretty close, March of 23. Going back to the COVID week, that's probably right in that range, 98.9% down. So COVID, that was the move. Is this the same as COVID? I would say probably not. But in terms of zones, 4.5, one of the zones where it really doesn't get there very often. You can start to count the number of times we got into this area. Not very often. We got a little lower here in June, and then September of 22 to that 2.3 area. Is it going to find support there? And then looking at the 50-day average, again, similar thesis to the 20-day. How many times does it get to this level at 11? Even less, right? So you can see it here, May and June of 22, October of 22, and then here again, October of 23. So about once a year we get this low. On market breadth, it can absolutely go lower. You can see it here, almost to zero in March of 20. That was COVID. And then you can see it here, very, very close to that same range in June of 22. So again, can it go lower? For sure. Is it already very low? Also, yes. And then moving over to 200-day breadth, this chart has a lot more kind of interesting moves to it. You can see that very long consolidation. We said it was going to break down, and sure enough, it did. Big sells. I didn't think it would be quite like this. Now we're getting into this zone again where you just don't see it very often. Back here, June and then September of 22, and then this was COVID, and then before that, December of 2018. All very good buying opportunities. We went much higher over the short to medium term. Are we going to go lower? Probably. We're probably going to hit these levels, at least the 18 to 19 area, this kind of consolidation range. If we get anywhere near the 11 range, buy it pretty much. That's pretty much as low as it goes. COVID was a massive outlier, 2.5 on that. The only other time it was there was 2008, a great financial crisis when almost everything in the world broke financially. So we got there for a long time, from September all the way here to March of 2009 before we saw rallies out. I don't think this is going to be anything like that, but you never know. Do keep that in mind. It can absolutely go lower, but we are already in a zone where typically if you're starting to buy in this area, you'll probably make money over the medium to long term. Moving over to the dollar here on the weekly chart, you can see the dollar was down 1%. It was down a lot more kind of mid-session. It was down over 2.5%, and then we found support in that 101.25 area. Momentum still very bearish, RSI still very bearish, but the 200 ended up holding on a closing basis. Pretty interesting. Is it going to go down to this trend here? That would be quite a bit lower, closer to that kind of 1.75% lower. We'll see if it goes there. It's not quite oversold yet, so it could go either way. Maybe this is a long consolidation. Technically, you still have a slightly higher high from here. Is this going to be a low, higher low, or not? Moving over to bonds, you can see J&K was down 2.9%. Big sells there. Last time we saw moves like that was this move here, which was terrible. That was obviously the inflation move. Inflation was going crazy, interest rates were going higher, and bonds were going lower. Makes sense. But we're just not in that same environment. We're coming off of the 200, so this was major resistance on the weekly chart. We talked about that before, but I didn't think we would go this low. The only reason that we would be going this low this quickly is recession fears, which I kind of understand. I don't fully agree with them quite yet, but markets price in the future. Is there a risk? Absolutely. Are we going to go too much lower from 89 to kind of this 91 range? Maybe. Either way, the better place to be right now seems to be TLT or those Government bonds, which were up 3% on the week, continues to look very, very good. I still think this is going to go back to here, at least in the 100 range. So this was a nice buying opportunity. We said the low is in here, got a higher low set up here, and continuing to go, in my opinion. Moving over to the VIX. VIX getting into some pretty crazy levels at a 45.3. Is it all the way up to the 60 area? No. Is this as bad as those times? Also no. This spike, I think, was out of place. I'm not sure why it did register quite so high there, but did get a massive spike, and that ended up being a nice buying opportunity. Is this going to be another buying opportunity? I do think so. It's already super overbought. Momentum still super strong. Same here with COVID, right? This was a massive move, very different dynamic, but we did get into the 80s. Again, ended up being a big buying opportunity. So do keep that in mind. Can this still go higher into the 60s? Yes. Is this still a potential buying opportunity over the medium to long term? Probably also yes. Moving over to my accounts, I ended up down about 3% on the week, which obviously is nothing compared to the 9% that we saw for the S&Ps and the NASDAQ, even more on individual stocks. So I was down a little bit more than I wanted to be for sure, but not nearly as bad as markets. And then you can see the position here. I did end up taking a small position, 399 puts for the Monday session. We have to fall another $24 at least before this starts to lose any money. You can see $3.99 with $2 credit, so $3.97 is the position. Is it going to go back to back to back on those kinds of moves? Maybe. Could be very, very interesting. So we're going to see. We'll see if we get a big sell into the Monday or not, or if the 9% move this week was just a little bit too much for markets and now we need to consolidate and rethink things. It'll be interesting to see how it plays out for sure. Let me know down in the comment section what you think of the portfolios or the strategies. Are you looking for any of those markets? Are you trading them? Are you holding them? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.